Mistral just borrowed $830 million, not from venture capitalists, but from banks. That is the first time a European AI startup has secured infrastructure-scale debt financing, and it signals something bigger than one company's expansion. Stay with me, because this reshapes how AI compute gets funded and who controls it in Europe. Here is what happened. On March 30, 2026, Paris-based Mistral AI closed an $830 million debt deal backed by a consortium of 7 banks, including BNP Paribas, Crédit Agricole, HSBC, and MUFG. The money buys 13,800 NVIDIA GB300 GPUs. That is the Grace Blackwell generation, and installs them in a data center at Bruyères-le-Châtel, south of Paris. The facility will deliver 44 megawatts of powered capacity and is expected to go live by the end of June 2026. Now, why debt instead of equity? Think of it like a company buying a factory with a mortgage instead of selling shares to investors. Mistral keeps its cap table intact, no dilution, while betting that future revenue from selling compute and running inference will cover the loan payments. Lenders agreed because they now see GPU clusters the same way they see power plants or undersea cables, bankable physical infrastructure with predictable demand. This is not Mistral's only move. In February, they announced a €1.2 billion data center investment in Sweden with Eco Data Center. They are also part of a joint venture with Abu Dhabi's MGX fund, Bpifrance, and NVIDIA to build a 1.4 gigawatt AI campus near Paris, with construction starting later this year. The target across all projects is 200 megawatts of AI compute capacity spread across Europe by the end of 2027. Let me put that in perspective. Mistral's total funding, equity plus debt, now exceeds $3 billion. OpenAI sits at $180 billion, Anthropic at $59 billion. So this is not a frontal assault on US hyperscalers. It is a calculated move to own the sovereign AI infrastructure layer in Europe, where data residency rules, regulatory exposure, and growing political unease about American tech dependency make locally controlled compute genuinely valuable. So, what changes for you if you are a business or tech leader operating in Europe? First, enterprise AI procurement gets a new option. Until now, running frontier models in Europe meant routing through Microsoft Azure, Google Cloud, or AWS. Mistral is building a vertically integrated alternative, its own models, its own GPUs, its own data centers. If you work in a regulated industry like defense, finance, or healthcare, a European sovereign compute provider changes your compliance calculus overnight. Second, pricing dynamics shift. More local supply of high-end GPU compute means European companies will not be entirely at the mercy of US cloud pricing. Mistral's annual recurring revenue reportedly crossed $400 million in February 2026, up from $20 million a year earlier. That growth rate suggests real enterprise demand, not just hype. Third, the debt financing model itself is a signal. If banks will lend against GPU clusters, expect other European AI companies and data center operators to follow. This opens a funding path that does not require giving up equity or depending on Silicon Valley venture capital. Now, the risks. Debt is not free money. Mistral is unlikely to be profitable anytime soon, and $830 million in loan obligations creates real cash flow pressure. If revenue growth stalls or model competitiveness slips, those payments still come due. The banks are betting on sustained demand. If the market softens, both Mistral and its lenders feel pain. Execution risk is real. Building and operating a data center on a tight timeline, while simultaneously competing on model quality against OpenAI and Anthropic, requires flawless coordination. Mistral has around 860 employees. That is a lean team for this level of ambition. There is also the question of whether sovereignty alone is a durable selling point. European governments and enterprises may prefer local infrastructure today, but if US providers offer better models, lower prices, or superior tooling, that preference could erode. Sovereignty is a feature, not a moat unless it is paired with competitive technology. Here is what you should do in the next 30 days. 1. If you manage AI workloads in Europe, start evaluating Mistral Compute as a potential provider. The Bruyères-le-Châtel facility goes live within months. Get on their early access list and benchmark against your current cloud costs. 2. Review your data residency and compliance requirements. If you are in a sector where regulators are tightening rules around where AI inference happens and where training data lives, a European sovereign option may soon be mandatory, not optional. Map those requirements now. 3. Watch how this debt financing model develops. If you are in AI infrastructure, whether building, investing, or advising, the fact that banks finance GPU clusters as traditional infrastructure assets opens new capital structures worth understanding. 4. Reassess your vendor concentration risk. If your entire AI stack runs on one US hyperscaler, Mistral's expansion gives you leverage in negotiations and a credible plan B. 5. Track Mistral's model releases alongside this infrastructure buildout. A data center is only as valuable as the models it trains. Their next generation of Mistral Large, reportedly at 675 billion parameters, will be the real test of whether owned compute translates to better products. The bottom line, Mistral just proved that European AI infrastructure is bankable, and that changes the game for every company deciding where and how to run AI in Europe. If you want to stay ahead of moves like this, subscribe to AI Blueprint. We break down the AI developments that actually matter for your business.